2. Mics are hot.
And we're here.
Yeah, we're here, and evidently the mics are hot, so I apologize in advance for anything you may have heard me say earlier. It was all out of love. So, with that said, here we are at Podcast Junkies in downtown Boca Raton. Larry Mastropieri, broker, owner of the Mastropieri Group, alongside myself, John Laws. This will be our last show of the calendar year.
Yes.
So, it has to do with the way the days fell on the calendar, the strength of the yen, and things like that. So, obviously, Christmas, also happy Hanukkah to those who celebrate. And here we are, Larry, and we will begin this evening talking about international tourism, which apparently, according to reports, is under economic pressure and immigration scrutiny. I had no idea there was anything going on with immigration in the U.S. Nothing controversial, but all right, here's the gist of it. Florida planes obviously are still landing in Miami, Fort Lauderdale, Naples, Fort Myers, you know, all the usual suspects. But the thing is, the tourism is becoming much more uneven. International travel in the U.S. is still below 2019 levels, pre-2019 levels. Fewer visitors coming from Canada and parts of Europe, rising travel costs, economic pressure are leading some travelers to choose other destinations, especially Mexico. So, I mean, when you're going to Mexico instead of the U.S., that's when, you know, that's kind of like a silent alarm. So anyway, at the end of 2024, analysts expected international arrivals in the U.S. to grow by roughly 9%. Okay, that sounded optimistic, but instead, the new data shows the opposite. In fact, overseas arrivals have slipped 3 months in a row, and the forecast has been revised to an 8.2% decline in 2025, with total inbound spending expected to fall about 4.2%. So that may not sound like a lot, but according to this, an estimated loss of $8.3 billion. Oh, wow. Now, I was going to say, you deal with international,
mistake.
right. I mean, you deal with international buyers and such all the time. And I know we've talked about this on and off over the course of the year. As we're kind of getting to the end here, do you feel like there has been a noticeable drop in international interest from what you've seen?
I would say definitely a drop in international buyers, specifically Canadians.
Right.
That I think that's a big topic. Miami and southern Florida does a lot more international business. Up here in the Palm Beaches, obviously it's international. It's more international than a lot of places in the U.S., but less, right? And so we see a lot more of inter-United States travel, right? Mm-hmm. Yeah, domestic travel here, and relocation from domestic states, mm-hmm. right? So it's a little less impactful, I think, from our perspective, mm-hmm. right? But I mean, I think it's obvious in the condo market, and condos historically are, you know, snowbirds, Canadians, right. Other people who are outside the country that just want something that they can like close the door and not have anything to worry about. They're paying their maintenance fee, done. But we're seeing, I mean, the condo market is the inventory's been going up and up and up while the demand has been kind of coming down, right? And so that's obvious. So,
and you know what always gets me with some of these articles and statistics is how correlation doesn't necessarily equate to causality. You know, we don't know if like the current administration is necessarily causing this drop. It could be economic factors in other countries stopping people from coming
100%.
Here. It's like, how can you possibly pinpoint it to one thing?
I think there's a lot of factors. I think one of the bigger factors, and you said, hey, more people are going to Mexico than to places in the U.S. It's just like, well, the U.S. is expensive.
Yeah.
Right? And I think we've hit like peak levels of unaffordability. We've said this so many times. And so when that happens, people seek cheaper markets, whether it's for places they're going to live or places they're going to vacation. And Mexico's a good example of that. Mm-hmm. Yeah. Mm-hmm. I mean, Latin America can be cheaper, right?
Yeah.
Oh, here's an example. Through July 2025, Canadian travel to the U.S. is down more than 25% year to date.
That's a lot.
Yeah. With land crossings off by about 30% in July alone. 37% in July alone.
Yeah. In fact, hotel occupancy in northern border states like Maine has dropped several points as a result. I mean, it's like Canadians won't even go to Maine anymore. Like, are they that angry at us? Have we stirred that pot that much that we go, you know what? It's like, not only are we not going to go to Florida anymore, we're not going to go to Maine either. That's it. Like, I had it. I've totally had it. All right.
I have nothing to say to that. I have nothing.
All
to
right.
say to
So as you scroll a little farther down here on the footnotes, or excuse me, the points, you have. I find it interesting how Miami-Dade mid-year data shows declines in several major markets. Brazil, Colombia, Canada, Mexico, France, Venezuela are below last year's levels. Well, what does that mean? So, I mean, yeah, any given year, there could be more, there could be less. It just, yeah.
It also feels like economic pressures just overall are increasing, right? So we're not in this like thriving moment. We're more in this like cyclical change. And so travel slows down.
Yeah.
When things aren't as great, right? Travel increases when people are making money. And so we're in a little bit of a different moment, I think, economically, and that's a factor. I found this interesting. $38.5 billion is what was brought in from visitors in 2024. I mean, this is a real business. This is a real thing. So to even like come off 1% or 2% is like real money. So this is it's something worth talking about, and it's affecting a lot of things. One of the big things I think we experience is the Airbnb business model has been hurting quite a bit. And so what we experience is people bought these Airbnbs 2022, 2023, 2024, thinking they're going to get rich, thinking this is going to be an amazing investment, and the Airbnb business has slowed substantially, just like the rest of the travel industry, or and so people turn around and they're like, I'm not making enough money or any money or losing money every month. We got to sell this thing. And then unfortunately, demand is off a little bit. Market's been softening. And so now we're selling these things for less than people bought them for in 22, 23, and 24. And so it's just like a big loss for these Airbnb investors.
Has that been a nerve-wracking thing for you at all?
For my investment?
Yeah, I know. Well, I know. Yep. Well, just because I know you do some dabbling in Airbnb type stuff, that's why I'm curious.
Like for me, fortunately, the stuff I bought it like so cheap. I didn't buy in 22, 23, 24. So like, yeah, it would be nice to make more money.
Right.
Like, you know what I mean?
I was curious.
But like, I'm not like have been fortunate not to get into deals that are tight to a point that has caused me stress. Like I don't stress about my portfolio ever. It's just like it's either making a lot of money or not as much, right? And it's still doing well, which is fortunate. And it's because, I mean, fundamentally you buy right and that's the thing. But again, it's very hard in South Florida for someone to buy right, period, especially if you're not in the business doing it every single day. I say this to people all the time. I'm in the business and the first deal I'm going to close in 4 years or 3 years now is tomorrow, right? So we're finally getting back to a point where we found something. And by the way, it's not in South Florida. It's in the Space Coast. So it's not even in South Florida. So it's a big transaction. It's a 40-unit apartment building, but it's not. Yeah, it's exciting. Yeah, but it's not in South Florida, and there really hasn't been much, in my opinion, that really works in South Florida for our investment thesis, which is cash flow.
And it
sounds simple, but
well, I was going to say, and it's not one of those where you're anticipating a horror story of federal agents raiding the building and
right, exactly. So you know the stories, so like so historically we bought in tough neighborhoods in South Florida because that was like where the best.
Did what you had to do, right?
Yeah, it was, and unfortunately that's been a learning experience. As you know, we don't need to get into that story. I'm happy to tell these stories all day.
Right. I was going to say, I digress.
But our guests or our listeners are here to hear about relocation to South Florida.
Yeah.
Yeah. So I think that's a big piece of it too. So like we're feeling the real estate market react to it from at least at a minimum the Airbnb market. And there were a lot of people who came and bought investment properties. South Florida tends to be this like hustle culture by the beach.
Right. And they're thinking it's all cool. Yeah, I mean, I got a place and we're going to be renting it out all the time.
Totally.
It's good. Yeah, I could totally see that.
You know, you got the whatever. I'm going to pinpoint a group of people, the New Yorkers that buy something and never come down and think they're going to make a bunch of money by owning something in South Florida. And it's just like, and unfortunately, in this case, it did not happen. In 2011, 2012, through 2019, you made a bunch of money, but not if you bought in 22. So it slowed down. It's obvious to me in my portfolio and others that we work with that the vacation market has slowed substantially, just given the Airbnb Armageddon we're experiencing in South Florida, which is what some people have been calling it. So, what's nice though is, I mean, we had a good hurricane season here, right?
Yeah,
and so there's some positives kind of keeping, knock on wood. There's some positives, kind of bolstering, the South Florida market. Like I think confidence is coming back on the Southwest.
Boy, they've gotten last couple of years they've gotten crushed. I mean, my parents, for years, because I'm not a Florida native, had a timeshare in Captiva, which like near Sanibel and Fort Myers on that side. We came there for years. It was like our family and close family friends, and we always went. And man, I mean, it happened again. They got annihilated a couple of years. It's gone. It just I really sympathize for anyone who's had to deal with that.
Yeah, so they're rebuilding. I mean, so it's like I think people start to forget over time.
Yeah. Well, no, because then it happened like back in, I think it was like Hurricane Charlie. I think it wiped them all, 20 years ago. So yeah,
they got hit a couple times. And here's my pitch for South Florida, which I don't know if I necessarily believe, but people keep telling me this. South Florida, like Palm Beach County, I don't know, Broward County, we are protected by the Bahamas.
It's true. It's
so that's why we don't get hit by as many hurricanes.
Yeah.
This is it.
Yeah.
I'm going to say that with conviction.
Right. This meteorology special report has been brought to you in part by here.
And so don't go to West Florida. Come here. Call me. I'm going to take care of you. You're extra protected here in South Florida because of the Bahamian Islands. They're just going to get tanked. The Jamaican Islands.
Yes.
Jamaica. Going to get tanked. But not Boca Raton.
No.
Where we're sitting right now. No way. Again, knock on wood.
I was going to say.
That's such a bad statement.
We're
gonna play that back in 7 months and just cry. But the other thing, FIFA World Cup coming to South Florida, which is, I mean, that's gonna be epic. That's gonna be epic. In fact, we're working with a client.
Are they looking to rent?
They're looking to rent in Miami. They're looking for the biggest and baddest thing. I mean, today we were looking at $200,000 rentals.
Yeah,
and you know what, a $200,000.
I've seen articles lately that people are like doing that sort of thing, and I'm like, okay, it's your money.
Yeah, $200,000. I mean, this guy and they sent me a home that they rented last year in California, which was like $90,000 or something, and it was like 25,000 square feet, and we're looking in Miami for something like that. And the biggest thing we could find is like 13,000 square feet, and they're like, and some of these, I mean, there's properties asking $400,000 a month, like bananas, and nothing touches that size of that house in California. It's kind of crazy. It's kind of crazy that you can't get this like huge house for $200,000, right? So the alternative suggestion I made to him, which is kind of crazy, I'm like, hey, we can rent these two houses that are next to each other on Star Island or something like that, right? And you can have this like pretty epic view of the city. You can be right in between everything, right? In between South Beach and between downtown, and you have two houses, and that'll round up to, I don't know, 200 or whatever it comes up to, and so like, again, I think it's just crazy how expensive Miami area is for rentals, like epic rentals like that.
And I mean, I have to imagine if you're going to rent like that, you got to do it now, not just because they'll be taken, but because I'm sure as it gets closer, it's kind of like when you park for a sporting event, you'll see those signs keep going up. By the time when you get close to the ballpark, it's like $200 to park. I mean, it's gotta be outrageous. I can already see the articles when we get to like right before the World Cup starts, and people what they're renting for.
Yeah, there's real. I think they paid $70,000, or they're like projecting to pay $70,000 per person for. I don't know if it's more than one game or whatever. But this guy's like, I don't know. He paid like $700,000.
Oh, yeah. I mean, dude, I was looking at some of the ticket prices. I'm
Yeah.
like, because I was really thinking about going. I'm like, man, I don't know if I want it. Like, I don't know it's that bad. I mean, it's like one of those things they just want to, like, because, you may never have another chance. But I'm like,
Yeah.
there's no FOMO going on here right now. Not when I keep looking at that price.
I would love, I haven't looked at the prices yet, but I'd love to.
I won't spoil it for you.
Yeah, I'd love to see see if that's feasible. Probably not. Anyway, let's go on to topic 2.
All right.
How do you say this, John?
Viceroy.
Viceroy, Fort Lauderdale, where condo comes to a lifestyle passport. Comes with a lifestyle passport. Yeah, so this is interesting. I wanna like judge this this statement. Viceroy, Fort Lauderdale, where condo comes with a lifestyle passport.
It looks nice. I mean,
Yeah. Picture this: you close on a condo in Flagler Village, and instead of just a set of keys, you're handed an entire new life, pickleball courts, lakeside dinners, and VIP treatment in hotels across the world. That's the promise.
Can't tell if that's AI or if that's actual photography right there. Ben,
so
can you
hard.
tell?
It looks real.
Like, that looks real, that shot there, but that, I'm like, is that?
I don't know. I think it's AI.
I know, man.
It's really good AI.
I'm suddenly like a conspiracy theorist every time I see a cool video.
Yeah, 100%. But this is an example of what they're offering. Now, there's a lot of epic condos. This is why I want to be judgmental about this. Like, I get. Let's talk through this and understand what Viceroy is offering that others aren't. So they're saying they're not just selling square footage in a tower designed by, I don't even know how to pronounce that company. Interiors by the Rockwell Group.
Architectocana.
Yeah.
Hanukkah. Architectoconica. Hanukkah. Guys, you need to relabel.
It is right. It is selling a daily rhythm with concierge teams that stock your fridge, walk your dog, schedule your spa time, and book your courts at South Florida's premier pickleball club. Yeah.
All right, pickleball. You got me.
You got the pickleball. Okay, so this is a 45-story Flagler Village tower, right? Mm-hmm. And becomes a membership into Nafali Group's carefully curated universe of sports, wellness, culture, and hospitality on the Atlantic coast. So, and we could show where this is in downtown. It's right there. And their claim is most condos still follow the outdated model with basic amenities, while today's buyers want more in a market crowded with generic luxury promises. This is my point. Like, I think there's plenty of luxury condos here.
So it's sort of like, what can we offer?
Yeah. And it's kind of an interesting location, right? So if you kind of zoom out a little bit, you can see where that is. Okay, right? That's like downtown, just north of Las Olas, right?
Yeah.
And so good location. So if you want to be in the city in Fort Lauderdale and live at peak luxury or have the best services out of any building, I think that's what they're trying to offer here, right? Mm-hmm. So that's kind of interesting. They handle groceries, pet care. They're talking about everything. They curate social events. Let's see, moving through more than 30,000 square feet of amenities. Restaurants, residents choose between a quiet owner's only pool, or an energetic resort-style pool with gardens, cabanas, and full service. So it looks like they've really increased the amenity load here and the amount of humans that are going to be servicing their, the residents. And I'm very curious what the cost associated with this is all going to be. I'm sure the maintenance fee or the association fee is a big number. It's probably relatively bigger than most. Some of these buildings that we've seen services in, even that are a little older, I mean, you can pay $10,000 a month just in your HOA.
Just to be the
yeah. I mean, you can pay more than that. So this is not a small number.
Well, I was gonna say, just with the HOA fees that we've talked about over the past year or so, they've gone. I'm like, well, $10,000, that's not that bad.
Yeah, you're like, that's not a big number. Yeah, that's fine. That's fine. Like, they're talking about, let's see, they have a boxing, fitness center, yoga, traditional training, spa suites, saunas. I bet this spa is incredible. Steam rooms, bookable through the concierge. This feels like you just you're just living in luxury here. That's great. And a short ride away is the Fort, billed as South Florida's premier sports, wellness, and social destination. This is where the partnership gets interesting. So, okay, so this is part of their pitch here. For the first 200 Viceroy condo buyers, an annual membership to the Fort Lauderdale Pickleball Club is included. That unlocks 43 pickleball courts.
That is a massive amount of pickleball courts.
I mean, if you're into pickleball, this is kind of cool. And so how far away is that from the actual building? It's like in that general area, isn't it? We'll take a peek. So we zoom out. Okay, so it's a little south of.
Oh, it's right by the airport.
Yeah, it's just north of the airport. So downtown is a little bit north of there. So you're probably 10, 15 minutes, probably something like that. With Fort Lauderdale traffic. Beach club access and lakeside dining is included at this facility. Open air social spaces where the clubhouse extends outdoors, wellness-focused amenities. Between games, you are not grabbing basic stadium food. You're sitting at servers and what is this? Serves and thirds. Got it. Or the Florida Room, both led by award-winning chefs. Okay, so they're doing this up pretty awesome. So this facility sounds pretty epic. This is interesting. National data shows that homes close to pickleball courts often sell at a premium.
Yes.
In some areas, up to 10% more compared to homes without such amenities. Pickleball has taken over.
Yeah, well, like as I keep asking all the time, I'm like, all right,
pickleball.
So is there like kind of a quiet war going on with the pickleball versus the paddle? Since they're not the same sport, apparently they are not the same sport. So I keep asking, is this like a fight for influence? Is this like a turf war going on? Because the way I see it right now, pickleball is winning.
Pickleball is crushing.
Yeah.
For sure. I think amongst amateurs, it's definitely crushing, right?
Again, it's like I honest to God thought they were the same thing when it was like an interchangeable term, like, football versus soccer or something.
I think so. The first time I saw paddle was abroad, so I think it's more of an abroad thing, and this was many years ago. But I think it's now kind of making waves here. Paddle sounds cool.
It does sound.
I haven't played it, but I watched it, and it's way crazier than pickleball.
Yeah.
So I think it takes a little bit more effort to play paddle. It's closer in effort, in my opinion. People are going to judge me for that because I have no freaking clue what I'm saying. Talking about, I think less effort pickleball. And then paddle a little bit more, and then tennis.
I see.
Somebody's going to be upset that I said that.
No. Because no, you just keep saying paddle and thinking about like that initiation from Animal House or whatever. Thank you, sir. No, please, sir, may I have another? Paddle.
Yeah, so this is what this community Viceroy is trying to achieve, right? They're connecting you to the sports center, which is high-end luxury, and then also the services. They're talking about lifestyle concierge again here, quarterly social activations, 24-hour attended security, mail, parcels, and courier services, all that stuff. Fresh flower service and in-residence botanical care. They're just doing everything. Just think about like a personal
So
server.
I guess here, just as I'm trying to look at the big picture with this, so is this essentially like a timeshare? Because I see the global perks, and there's other, a whole Viceroy network, hotels and resorts. I'm like, so is that the gist of this? Am I understanding this right?
No, I believe this is a condo.
It is a condo, but
they're branding just like the Waldorf. They're branding. So yes, I think you are connected. Correct. Yes, that just like the Waldorf would kind of give privilege to people who are living in the Waldorf, buildings. This is it. Discounted room rates, Viceroy Properties. There you go. 20% off published rates. So they're trying to just add in value here. The reality is this is a nice perk to have, right? It's just if you're gonna use this stuff, and it probably doesn't affect their bottom line very much because there's only X amount of units in this building, right?
Right.
So yeah, 20% off spa treatments.
Well,
get it all,
okay,
John. Get it all. Yeah.
Spas and pickleball. I'll tell you what, I'm sold.
Niftali is the developer, right? They have a track record of more than 50 projects and over $15 billion in total value. Their specialty is commissioning high-profile architects and designers, then building residential experiences that feel curated rather than mass-produced. Okay, so they specialize in the ultra-luxury.
I'm looking at Ben right now. I'm looking at the building. Like, that's a rendering. But some of the, I'm like, yeah.
What about that?
I think that's a rendering.
I think it is too,
Yeah.
but that's pretty epic.
God, it's
that's
killing
pretty
me.
good. Okay, so let's see. Fort Lauderdale's branded market is growing rapidly, focusing on beachfront and downtown prestige. This is my point. So there's other product in the area. Four Seasons, Fort Lauderdale, Ritz-Carlton, Auberge, like all these places. And then Pompano's got a bunch of stuff going on, right? Celine Oceanfront, I don't even know, Andar Residences. Andare. Okay. So there's a lot going on in South Florida, and a lot of it's luxury condos, and they've been doing a good job in selling pretty well, and so these developers have been piling in.
Yeah. I mean,
so
it's
we'll see if
interesting.
this continues is the question for me.
Well, right, because I mean, normally if we were having this kind of discussion and you did not mention a city name, by default I'd assume it was Miami.
Totally.
You know, just seeing that it's like Fort Lauderdale, I'm sure there must be a little bit of a insecurity, an inferiority complex, something that's like, no, we got to catch up.
Yeah. Well, I also think like it's expensive to buy land in Miami.
Yeah.
And so developers are looking for the next opportunity, and Fort Lauderdale is a real city.
Yeah.
This is what I found interesting. Branded condos. These properties often command 20 to 30% premiums over non-branded equivalents due to the prestige, manner of operations, and strong resale rental appeal. This is super interesting. So now we're seeing this everywhere, right? It started in Miami with these unique branded towers. Now it's Fort Lauderdale, Pompano. We're seeing this everywhere.
And you see, I thought the whole reason that they were doing that initially was to get, to put their sponsorship on it. You always talk about the pre-sales to get these condo constructions underway, to kind of give them a boost, to get things rolling. It sort of like naming a stadium, getting a sponsorship for a stadium, the Ameritrade Center, wherever. But having that name on a building, that was kind of the reason. But now it seems like it's just as lucrative from what am I trying to say? From a exposure standpoint, to have some of these bougie names on the side of the building. So it's almost like now the builders are going to them saying, hey, we'll pay you to put your name on us instead of the other way around.
Yeah. And there's a combination of requirements when you put your name on a building. It's kind of like hotels. If you're a owner of a hotel, you're required by the brand or the flag you're flying to upkeep a certain level. You have to renovate every X amount of years. You have inspections. You have these things. So there's some level of that with these brands as well. And so, yeah, to your point, I think it's a combined benefit. Brand awareness increases because it's just yet another place where this brand has its name on a big building, and then the person the developer who's selling out sells for 20 to 30% premiums and sells faster. They also say here in South Florida in 2025, the branded segment outperforms the broader market amid softening inventory elsewhere. Miami ranks number 2 globally behind Dubai with 48 completed and 55 planned projects. It's bananas.
Yeah.
Bananas. So these developers are all in, and I think there's going to be a point, and it may be coming soon, where like we kind of hit that.
Yeah.
That
well, they
peak.
keep saying it. I mean, it's like, well, said,
I think we're there. I think people just don't realize it yet.
Yeah,
that's
it's
my
a lagging
opinion.
indicator.
I'm calling this right now because I'm selling or reselling condos in these buildings.
Yeah.
that have just recently turned over or recently delivered, and I'm seeing the inventory pile up. And there's some people that can hold, and a lot of these wealthy individuals can hold, and they don't need to sell, which is what I think is preventing the market from changing quicker. Anywhere else in the country, not anywhere else, but in most other places in the country, you would see people react more quickly to, hey, my house isn't selling. Some of these sellers here, which is very unique in South Florida, they're just like, it doesn't sell, whatever, we'll hold it. Or pull it off the market. Let's just rent it. Or you know what? Just leave it. Forget it. I'm not even thinking about it. I'll deal with this after I finish my 3 or 4 month vacation in Europe, and then we'll figure it out. If it's not sold by then, we'll switch brokers and we'll do something else,
Yeah.
And we'll just keep it out there. And so you're seeing that. But then this is what I tell everybody. The urgent seller is the one who creates the market, right? What I mean by that is that's great that 90% of the people are able to hold that property and don't care, and they're not going to drop their price until they get their number.
Right.
There's going to be that 10% that they have some urgency. They need to sell. So they're just going to keep adjusting price until they get it done. And that's the new comp. And so now everyone has to follow that comp.
Yeah.
People still aren't following that comp. And again, this is why I think there's this lag. We just did it in one of the buildings here in downtown Boca where we made offers on every unit in the building because my buyer was very focused on basis, getting the best deal. And he didn't really care what unit he got. He had some preferences, but he didn't really care that much. And so we just made really aggressive offers everywhere. And by aggressive, I mean low. And eventually somebody showed
cracked.
up.
Yeah.
Somebody was just like, told their broker, and their broker told me, they said, don't lose this deal, right? And we were $1.5 million off, at least, on our offer. And he was like, don't let this go. And so he told me that, and then, well, we didn't come up in price very much. And then we sold the house. We did it. And he sold below the pre-sale numbers in 2021 per foot.
Oh, wow.
So that's like a material difference. And so I think we're going to see more of that happen.
Yeah.
Over time, it'll correct. Unless the market bounces back and saves everyone, we'll see more of that. And so we'll see where it goes. But I have a feeling as I'm watching the inventory increase in these newly delivered buildings after Related Group walks away, after the Naftali or whatever, this developer walks away, after they sell everything out and they turn it over to the people who have purchased, the inventory goes up. And now it's just kind of sitting. And then they're competing with the other guy that's building the next building down the street. And so we're seeing this like combined effort. Anyway, that's my rant on this. Let's move on to topic number 3.
Okay, let's talk about Boynton Beach because you know what? We haven't talked about Boynton Beach in a while. But here we are, and we have a developer that is asking the city for $7 million in tax rebates. Am I understanding this correctly? A vacant corner at Federal Highway and Ocean Avenue in Boynton is about to turn into 371 new homes. But before any concrete gets poured, the developer has come back to the city asking for more help. Because why not? An extra $7 million in tax rebates on top of the $9 million already approved. Well, I mean, I guess you have to. They can't say no if you don't ask.
Amen.
All right, so this is Ocean One, a massive mixed-use redevelopment plan for 114 through 222 North Federal Highway in Boynton. Started at $9 million tax incentive deal to bring in new apartments, retail, and public parking to a long-stalled downtown site. Now the developer, as mentioned, is asking to raise that incentive up to $16 million and extend it to 15 years. And needless to say, that opens up a lot of questions. Larry, what do you know about this? Have you heard about this?
I'm generally irritated about Boynton.
Well, I know. I was going to say Boynton. When they're talking about a downtown site there that's not going to be used, or a long stalled downtown site. I'm like, so basically, like anywhere in downtown Boynton Beach. I mean, come on.
So let's throw up that map on the screen. And this is why I said I'm irritated. Boynton has so much potential, and there's so much opportunity there if all these developers just get after it. So if you zoom in a little bit, Ben, just a little bit, you can kind of see what the downtown looks like. Okay, so we're talking east of, Seacrest there, just a little, and you could see the city and the Community Redevelopment Agency owns, you see all that vacant land, there's like some vacant land.
Yeah, I mean, I know I've been through there many times. Yeah. I know that there's a lot of empty spaces.
And the CRA owns stuff like all around there, and then there's developers that own most of that stuff in that south Boynton Beach Boulevard corridor, south of Boynton Beach Boulevard, east of Seacrest, right, and then all the way to the beach, right? Mm-hmm. And so this developer over here, I mean, they've been messing around with that space forever. If you go just a little west to it's like they've been messing around with all that, all on the map right there, east of Seacrest. It's all planned and approved city projects, or at least the city's like, hey, yeah, go do that. Like we agree with the premise. That little sector could and will change long term. It will change. It's just taking forever. So this is just like another.
I was going to say, we were talking about this almost 3 years ago, because I'm looking at City Hall, so brand new, and just there was a lot of open spaces around. I'm like, wait a minute, have they still not done anything?
Yeah, so it says here, for years, the corner of Federal Highway and Ocean Ave represented stalled progress in Boynton Beach. And that goes for so many of these other plans, with plans approved and land assembled, but no construction ever starting. This is the same story for like 7 other parcels that have been assembled. And there's guys that have assembled big parcels in this area. That changed in 2022 when Hyperion Development Group bought the 3.7 acre site for $12 million and revived the Ocean One project, which we were excited about and you and I have talked about. Yeah. But again, which bringing new momentum to downtown redevelopment. The key issue now is how much public funding the city will contribute and whether the project still makes financial sense as economic conditions continue to change. And that's what it is. Long term, when the economic situation is right and or the city agrees to give taxpayer dollars to these guys, basically is the real way to say that. Then these things will get done. But for now, and then as a couple of these get done, I think they'll see that there's momentum here and the other ones will get done.
Here's my question, and maybe you have a theory on this. We were just talking about a couple weeks ago about the exorbitant amount of money that they're going to pour into Riviera Beach.
Yeah, it's like, why not Boynton first?
Right.
Mm-hmm. Yeah.
Why?
Yeah, I agree.
Do you know? I mean, do you have any theory? Do you know? I don't get it.
I think I'm partially biased. I think that the ability to change Boynton is way higher than the ability to change Riviera. Right. And so, like, for me, it's like, if just a couple of these developers, like, if they all get together and they're just like, oh, hey, there's 7 parcels. Let's get all the 7 guys that own these things or big companies and like, hey, we're going to do this. Let's just kind of do this all at once or try to work through this together. And if we all go in, we're going to have a huge project. And there's going to be a lot to sell out, but there's also a lot of these are rental apartments. And this is just on the north of Delray Beach, just south of West Palm.
Not, yeah. I mean, it's right there in the heart of Palm Beach County. I don't get it.
Good location, I think. I think like that city is positioned really well, and I think I think any of these projects are like the obvious like discount option for people who want access to Delray, want access to West Palm, want access to the international airports. All of that's great, and it's close to close to 95, so really efficient access. So this 371 rental apartment project could be the catalyst to get things going. But they're basically asking to double what they got already, and I just don't know if the city's gonna play ball with this. So it looks like they're just making this attempt. By the way, I don't know. Like things aren't working out there because clearly they can't figure out how to make money on it. Like that's the end of the day thing. If developers could figure out how to make money on this stuff, everything would be torn down and built. Right. Like it's not like they're waiting. I just think Delray. I just think Boynton Beach is just they haven't had the obvious like.
Is it leadership or lack thereof? I mean, just because you deal with these cities and ordinances and things like that all the time when you're, buying and selling homes. That's why I'm like,
the city is generally pro approving this stuff. Like they're, and I've worked with them because I have stuff in the area and we got an approval to build in that area. So personally for our stuff, so I think they're like if you go the right course, you can get things done there. I don't think it's a problem. I think it's in Pompano. There was a building that went up and they sold at X and they can see that and they saw good demand and so they moved on to the next one and did it again and they saw good demand and sold out and made money and then they did the next one and now there's like 20 of them, right? Mm-hmm. And so there's really not any of them in Boynton.
There's no domino to start the chain.
Yeah, so somebody kind of needs to kind of start that. And all of these are slightly weird, slightly different than... And all of this is like not super luxury. That's the other thing. Projects, right? These are all like apartments with retail downstairs. It's a little different. It's a little different than like Pompano on the beach, luxury real estate just outside of Fort Lauderdale. So anyway, that's the spiel here. So I think long-term Boynton Beach has a lot of opportunity. I would highly encourage, if you're an investor, to kind of really consider that little sector. North of Boynton Beach is a little bit north of Boynton Boulevard. There is a little rougher. South is more interesting,
Right.
And that's where we own a lot of our stuff in that area. So, yeah, okay.
So if you're going to buy a home in South Florida, that might go up next year too, if you were wondering.
Home prices in South Florida could rise next year, new report says. Let's talk about it. I have my opinions on this, as you know. Okay, Florida was the place everyone rushed into. Now it's the place a lot of people are quietly backing away from. That's interesting. In 2026, most Florida house prices are expected to fall, while the rest of the country ticks up. And we're kind of seeing that a little bit. And yet, somehow, Miami and South Florida might still end up on a completely different track. And I think that's possibly true, but I think it's more likely not.
Yeah.
Let's unpack Realtor.com's 2026 National Housing Forecast and what it really means for Florida. Okay, I haven't really looked at this yet, but we've done a lot of reports, and so we have opinions on this. Mm-hmm. Across Florida's 8 largest metros, prices for existing homes and condos are projected to fall an average of 1.9% in 2026, while nationally prices are expected to rise about 2.2%. Only one major Florida metro is forecasted to post positive price growth: Miami, Fort Lauderdale, West Palm Beach, up just 1.1%. Okay, so the projection is 1.1%. And this is the conversation I have with a lot of my sellers. I'm like, hey, if we're projecting 1.1%, should we wait to sell if we're on the market and we're not getting our perfect number, or should we just sell? What is 1% of our sale price? If we're talking $1 million, it's $100,000. No, that's not even $100,000, right? That's
$10,000.
$10,000. It's like, it doesn't like that. Does that really make sense to carry this thing? So this is one of the conversations we have, but that's just an estimate. And I think it's possible that things are not as interesting, right? And it just depends on the product, especially if you're a condo owner. So at the same time, volume of sales in South Florida is expected to drop 7.1% next year, one of the steepest declines in the country, which we're seeing, right?
So, right, yeah. I feel like that's been the theme over the last year plus, that
100%.
People the sellers aren't budging.
Interest rates changed in 2022, and March of 2022 they started climbing, and we started feeling a change. It wasn't super immediate, but 23, 24, 25, now rolling into 26, it's obvious prices have come down. I mean, we can say this not just from a statistical perspective, where we're actually seeing the data show prices are less today than they were yesterday, but we can also just feel it from the homes we sell, from people who are listed homes with us that paid, X dollars in 22, 23, and 24, and they're selling for X minus whatever, right? And it's just a thing. They're selling for less, even with upgrades. Like, guys, this is like scary. Just be careful. Make good decisions when you're buying. So what is that? What else does it say here? The forecast, where prices are headed. The Gulf Coast. Cape Coral is projected to see prices drop 10%. Okay, so you may have seen this, right, on Instagram and everywhere else. Cape Coral, the worst housing market in the country.
Oh, yeah.
So, like, that's an example. 10% price drop in Cape Coral. Holy smokes. I had a broker reach out to us to sell us a big apartment building in Cape Coral, and I was just like, I don't know.
Yeah.
And it was like kind of top dollar. I'm just like, we gotta watch that. I don't know. That doesn't feel super comfortable. Cape Coral you may be in a wait position here if you're thinking about investing there. It's something to consider. Northport, 8.9%. Tampa, -3% year over year forecast. Yep. Kissimmee, down 1%, 1.6%. Orlando area. Jacksonville, down 1.4%. So it's interesting to just see the market. And this is why me and my partner are very cautious about where we're investing and why we haven't bought stuff very recently. And now we're starting to see these multifamily deals kind of show up where they're like, oh, this is actually interesting now. Mm-hmm. Like the math actually might make sense, but not in South Florida. Yeah. Other parts of Florida, yes, but not so much in South Florida. So that which is kind of interesting. Okay. And then condos. Median list price for condos. We're down 10.8% year over year. 10.8%.
In a year.
That's a huge number, guys.
Yeah.
Like, these are like Great Recession numbers, or the intro into the Great Recession numbers, right? Obviously, prices fell more in certain areas, but these are like big changes. We are in the cycle, and you have to understand that if you're a seller or a buyer, just be aware and make smart decisions. Yep.
Yeah, Surfside is the tragedy that just keeps on giving.
Yeah, and so that's a whole nother thing, right? And so without like diving too deep into this, because you and I have beat this to death.
Yeah, I know, right? We recommend you go check out our videos.
Yeah. Are homes actually more affordable? Yes and no. Valid. Condo prices per square foot are up about 26% over the last 5 years. So if you look at it over the last 5 years, no. So I guess what the communication here is like, hey, prices haven't fallen to like 2019 levels, and nor do we expect them to.
Right.
We just expect prices to come down a little bit more. So, yeah, and affordability is a whole different discussion because it factors into what's the interest rate, right? And what are the assessments on these condo buildings and all that stuff. Single-family home prices per square foot are up 34% over the past 5 years. Median household incomes are estimated to be up 27%. So incomes are up 27%, prices are up 34% in single-family homes. It's not keeping pace, right? Thus, that's why we're seeing a slowdown.
Yeah.
Condos used to list at about 4.6 times the median income pre-pandemic. In 2025, that ratio is expected to be around 4.4. On paper, condos are slightly more affordable relative to income than before COVID, which I think we can kind of get because condo prices are falling faster than everything else. But the insurance, et cetera, is I think still hurting that. So, yeah.
All right. Well, fortunately for celebrities like Sylvester Stallone, he hasn't had to worry about buying or selling, condos, and has a really nice home in Palm Beach. In case you hadn't heard about it, but anyway, the couple who sold Stallone that house has now listed their Manalapan home for $85 million.
Let's go.
Yeah, let's check it out. This, on the surface, looks like a simple story. Wealthy couple sells Palm Beach estate to Sly Stallone, and then lists their next one for $85 million. But when you zoom in, you see a very deliberate series of moves along one of the most coveted stretches of coastline in South Florida. Wow, that's really nice of them to say that with Manalapan. We're going to follow how Ron and Cindy McMacken traded one trophy property for another and upgraded it into a private resort, and then quietly secured an even larger ocean-to-lake lot up the street. Because I guess that's just when you got the kind of money and it's what you want to do, more power to you. They're asking $46 million more than they paid roughly 5 years ago for the Manalapan home. Yeah,
All right.
I was going to say, you don't make it this far in life without a little optimism. Ron is the chairman of Pan Pacific Mechanical, an employee-owned piping and mechanical company. That's great. So they owned a lakefront compound at 1480 North Lake Way in Palm Beach. They've owned a lot of things. I'm kind of looking through where they are. They purchased, and I'm sorry, here we go. They had purchased an ocean to lake estate at 1660 South Ocean Boulevard in Manalapan. And there was video below that of Stallone's place that we had done earlier this year.
Got it.
Yeah. So anyway, this is a very nice home, and I'm just looking at some of the additional information here. Local reports list 24 to 31 luxury homes in Manalapan alone, with prices starting at $21 million. Yeah, we know it's Manalapan. It's very nice. Obviously, too, billionaires tend to buy multiple adjacent parcels, often tearing down existing structures and then building their mega compounds. Ask Ken Griffin. This is all about creating the irreplaceable estates rather than the short-term flips. So I guess the McMackins are having a lot of fun doing that. Kind of just rolling through this one. I'm looking at the some of these other ones. I mean, Stone Creek Ranch, of course, with Russ Weiner, a.k.a. Russ Savage. It's okay. So I'm looking through here. Do we want to move on to the air taxis? Because I'm not going to lie to you. That's the coolest thing I've ever seen in my life.
Let's do it.
All right.
Let's get into it.
We're kind of moving along here.
Flying 20-minute taxi rides from Miami to West Palm could start in 2026. So this is kind of interesting. And the renderings of these things, or whatever they are, the concept vehicles are pretty epic here.
It's basically a huge drone, that can see people, which you knew that was how it was going to happen,
Yeah. In a couple of years, that Miami to West Palm drive, that steals 90 minutes of your life, maybe longer, but could shrink to 20 minutes via flight through an electric air taxi. This is kind of exciting.
Yeah.
And I don't know if you saw this, but Elon Musk was on Rogan in the past couple months, and he also was suggesting that his concept vehicle was possibly going to be an electric vehicle.
You know what's going to be great? Maybe they're just going to upgrade your current Tesla software, and then you're going to, you just take off.
Yeah, they probably have like little turbo jets on the bottom of my wheels, right? Yeah. That'll be cool. Yeah. So right now, the Miami to Palm Beach story is simple and painful. Booming population, limited road capacity, brutal commute times. Of course, we know this. Actually, so I was just doing this with one of the guys that was looking to rent that super expensive house, and he's like, "Oh, Aventura's got a really big house. Let's look at that one. It's on the beach, et cetera, et cetera." It's the only house on the beach that we can find close to Miami, and he's like, "Oh, what's it? 20-minute drive?" And I'm like, "Let's just GPS it real quick." It's like an hour and 15 minutes from Aventura at 4 p.m. So a little kind of whatever, to like downtown Miami.
And I'll tell you what, it makes you wonder if they're intentionally trying to get these, air taxis ready for the World Cup. I mean, that's a
good point.
It's the perfect place to show it off. It's also very practical with everybody who's renting places around there who have the money, be like, "Oh, I'm going to go take an air taxi to the game." You mean a helicopter? No.
Just call the air taxi. The Uber.
Have you seen the app? It's incredible. I'm kind of like the little kid in me, keeps thinking about George Jetson, and I'm like, this is gonna be so cool. And I just like saying eVTOL because
eVTOL,
the eVTOL electric vehicle. I forget what TOL stands for. TOL. I don't know. Anywho, that's they
can do 20 to 50 mile hops.
Yeah,
is the whole thing, right? Top speed 150 miles per hour.
That's crazy for something that's electric.
Yeah. Quick turnarounds and minimal charge time between flights. So instead of burning fuel, turbines, you have electric motors. So noise profile is dramatically lower than traditional helicopters. Kind of interesting, right?
That's actually cool. And it's looking at some of the renderings. And I'm looking at some of the renderings, and they're like, wow, that's actually different than what I picture in my head. Honest to God, in my head, I pictured just like, kind of the standard DJI drone you see, and just except making it to scale to fit 4 people, a pilot, and luggage.
Yeah. But this thing can fit 4 people plus luggage, right? That's what they're
I didn't just throw that out there.
Yeah, that's a thing. Yeah.
No. So
who's backing this and why real estate people should care? Stephen Ross.
I know. No.
The billionaire owner of the Miami Dolphins.
Yeah.
And also super involved in downtown West Palm Beach. So West Palm to Miami.
Yeah.
That makes
right.
Sense. That's what happened here. This is what it is. Ross just wants to get to Miami fast.
Well, and I'll tell you this. I mean, so
I'm sure he takes a helicopter right now anyway.
Well, right, exactly.
Sorry. Sorry.
But here's the thing. Theoretically, it's like, let's pretend it's like $200 to get there. I mean, as much as some of these Brightline tickets can cost, you got some real competition there. It's like, oh, you want to take the Brightline down there? Nah, let's just take an air taxi. Why not? It's faster,
100%.
Better view. Don't have to put up with anyone. It's like, all right. Now, maybe they'll have like ride-sharing air taxis. Like, I want to save a few bucks here. So maybe we'll pick up somebody in Aventura and then keep going until we get down there. Yeah.
Miami Mayor Francis Suarez has also positioned this as part of the city's identity, a place that bets early on new mobility and uses the sky as infrastructure, not just empty space above traffic. He's all in on cool stuff. Anything that's cool, he's in. Crypto,
which sounds like every Miami, right? Every Miami wannabe socialite ever.
Yeah, it's so true. Yeah.
All right.
Archer is targeting as early as 2026.
That's what I'm saying. It's like they want that for the World Cup so bad. They want to show it off.
So let's see. In June 2025, the federal government created an eVTOL integration pilot program directing directing the FAA to pick at least 5 projects to fast track low altitude passenger operations in real U.S. cities. So this is a big push. This is a real thing. And to your point, you just said $200, right?
Yeah, that's what I'm saying. I'm like, and I'm, honestly, if you were really needed to get somewhere and just didn't want to deal with the hassle, $200 is not bad. I mean, it's like knowing how it could be hell in a handbasket to get to the airport. Like, my God, it's like, all right, I'm just gonna do it. Screw it.
100%. Oh shoot, I'm not gonna make my flight.
Let's go. You're right. It's gonna happen.
Yeah. All right.
Anyway, all right. So UAE fund invests in Wellington Equestrian because they are a real estate heavyweight. All right. So let me make sure I'm understanding this here. Picture this: you're watching riders fly over fences at Wellington International, but the real jump is happening behind the scenes, where a UAE developer just bought into the entire equestrian lifestyle machine. This is the moment Wellington quietly goes from local powerhouse to global destination project. Well, if you're into equestrian, I thought they kind of already were. I like saying the word Abu Dhabi, and it's actually an Abu Dhabi-based group called Modan. They've taken a minority stake in Wellington Lifestyle Partners. Who's Wellington Lifestyle Partners? Glad you asked. It's a group that controls the Wellington International Showgrounds and a growing portfolio of luxury real estate developments in Wellington. So this is not a quote-unquote horse show investment. It's Abu Dhabi's Modan Holding buying into a privately controlled ecosystem of land, clubs, festivals, and future development potential that could define Wellington's next 20 years. That is a bold statement. We have an address here on Modan.
Let's check it out.
All right, here we go. There it is. So taking a
Wellington
look at
International.
Mm-hmm. Which I was going to say, I mean, Wellington does have it's right by the Equestrian Center, Central Park, which if you ever by there, it's really nice. I mean, just if you're into equestrian and those types of events, it's beautiful. And I know there's been a number of celebrities that have, put money into that. I believe, didn't Bill Gates, his daughter, I guess, was really into equestrian. I know he's got hooks in there.
Mm-hmm. So these guys bought into a company that owns Wellington International Showgrounds, as an example. Mm-hmm. So that's basically, they're like making a real estate play by like JVing or giving some liquidity to this bigger company.
I see.
Yeah. So instead of just like trying to figure out how to aggregate their own stuff and build their own stuff, they're just like, let's just go buy into this.
Yeah.
This.
We'll throw enough money at you until you say okay.
Yeah. And so this probably gave this company a big valuation. They got some liquidity here, whether they're paying out their, the partners and or getting ready to do more deals with that liquidity. This is the move. And then this UAE company gets a piece of the U.S.,
right,
if you will, or a very interesting, unique real estate market when looking at the whole country. Like Wellington is different.
Yeah,
it's different, and it has a special tailwind, if you will, right? Mm-hmm. So what else? They own the Wellington, a newly approved private club community, planned 253 luxury homes, and of course the Marketplace, a mixed-use village concept, boutique hotel, the Wanderers Club, a golf and country club already in the portfolio. So they got more projects coming, and they've owned and operated some of these things out there, right? Mm-hmm. The people behind the curtain. Mark Bellissimo, founder and co-owner of WLP. He and his group sold Wellington International in 2021 to European investors, then bought it back in 2024. That alone tells you they see unrealized value ahead. Very interesting. That probably was a good deal for him.
Yeah.
If he's buying it back and he sold it, he probably made some money and they didn't operate it right.
Yeah.
It's interesting. And then there's a number of partners that have experience in luxury community development at a global level. Yep. So these guys are making big moves in Wellington, and I think Wellington is an interesting market. It's different. I keep saying that, but it's different, one, because it has this unique equestrian thing.
Right.
These developments and developers that are entering this market are going to bolster the real estate market there. I think so. I think there's good value long term. The one thing it doesn't have is not on the beach. Right, and it's a 25-ish to 45-minute drive to the beach, depending on where you're going, and so. But on the other hand, it's not too far from downtown West Palm.
No,
right down Southern, and not that it matters a lot, but it's good access to that central Okeechobee area. And I think long term that area gets more interesting too. It's going to take a while. That's 20, 30 years out, but proximity to downtown West Palm is valuable, and then also this like socialite atmosphere. Right?
Yeah, no, it's very unique. I mean, it's a beautiful community that it has a unique feel to it versus other parts of Palm Beach County. Absolutely.
Yeah. Let's see. The UAE has outlined a $1.4 trillion investment strategy in the U.S., spanning real estate, data centers, renewable energy, and other major sectors.
Yeah. Major
players include...
Oh, and as I'm looking at the CNBC article that Ben pulled up, the White House acknowledging that, it's interesting because that was my thought. I was like, well, we've talked about how there's much more limitations on international buyers and stuff like that, but it's like UAE's like, we're just going to throw 1.4 trillion. All right, cool, welcome.
I think they have a good relationship with the administration, right?
Yeah.
Is that fair to say? I don't know a whole lot about that, but I think that's a thing. Mm-hmm. So I think they feel comfortable.
Okay. Would you want to wrap it here?
That's it.
We're doing it.
That's all
okay. On behalf of Larry Mastropieri, broker owner of the Mastropieri Group, I'm John Laws of Discover South Florida. Just want to thank you all again for tuning in. And this will be the last time we see you before 2026. So have a safe and Merry Christmas and a Happy New Year. We'll see you on